Miss Shay, how are you? Good to see you.
I'm doing great. How are you?
Good, good. Why wouldn't they just put Apple this week as well, and then we could just get it all over with in one shot and be done with it? But we'll get to that. Yeah, we'll tee up what is obviously to this point the biggest week of this current earnings season here, and talk about all the big ones that are to come. But I want to get your take first on Tesla. I know you were talking with Sharif last week a little bit on not only the CapEx side of things. We get more information on that this morning with revised guidance to the upside on what they're planning on spending, but also this new Model Y, which is kind of interesting, coming to Canada of all places.
Well, are you going to get one? That's my first question.
Nope.
So when you look at Tesla, I mean, first of all, I was pretty disappointed by the lack of a move higher going into the earnings report. That's a pretty typical pattern that we see in Tesla, and we didn't get that this quarter because of the continued price cuts. Then, of course, when the earnings report came out, it was definitely weaker than what I would have wanted to see. So from a trading perspective, I think that one was a big disappointment, but I will point out a few things about this. Number one, I normally see the NASDAQ fall, pretty well along with a bearish move in Netflix and Tesla, and that didn't happen here. So, A, the NASDAQ's pretty resilient. And then B, when you look at the actual report and you look at what they're doing, yes, of course, you did have margin compression, but that's something they've been saying they're going to do for a long time. That was the idea behind creating so many gigafactories and increasing production, was they wanted to be able to cut prices to make those vehicles more affordable. So when you look at, the overall game plan, yes, it took a hit this quarter, but I think in the long term, Tesla remains an AI company, and they're going to, have FSD out. They're going to be selling that product to all these people that are now able to, buy the cars at a lower price point. They got the Cybertruck coming out. So I think long term, we're still on track, but I was disappointed in the move last week.
Yeah, a ton to consider as well as far as what the overall company is doing. But I mean, they had that launch with SpaceX back on Friday. That was just incredible. Starlink is a whole nother conversation. So a lot obviously on Elon's mind. But we get another Texas factory to come. We get another Mexico factory that was going to be in the works, apparently already in the works. So yeah, the spending continues for Tesla, 2.5% here today. We'll see as we go forward. Before we get to some of the bigger names that are to come this week, I want to touch on one that's tomorrow morning actually, and that is Spotify, because it's one of those names that can give us pretty good opportunity typically around earnings, but has kind of taken a back seat in the past couple of earnings quarters because they, let's be honest, haven't been that good. But give us your take here on SPOT to come tomorrow morning.
So when you look at Spotify, this one's gotten pretty creamed, but what I do like about this chart is the fact that it's holding the low right now, and we've seen a shift in trend. So it held that low at 69. We're seeing that trend shift higher. And then specifically last quarter, we had this move where it gapped higher by 9.4%, and this move kept going. So what that tells me is that the tide is shifting on this company. One quarter is not a huge deal. But if we can get another positive quarter, 2 in a row, then we could end up seeing some bottoming price action like we've seen, with Meta and with Netflix. And so we could end up getting quite a bit of a retracement if they can come through on this earnings report.
The first to come tomorrow with two of the biggest of the big, Microsoft and Alphabet, Google, obviously going to be watched by the majority of not only investors but traders. But there's a few other names that are coming tomorrow that are kind of interesting as well. We've seen these clean energy related semiconductors have huge moves. Enphase, ENPH, another one that's going to report. But let's start with Alphabet. There's a ton of different angles we can kind of approach this with. The AI side, obviously, with Bard just last week, in fact, getting to a point where it can not only write code but correct code for engineers. But that's something that obviously ChatGPT has been doing from day one. So we can talk about, let's talk about Google to start things off, and then I want to get your thoughts on YouTube as well.
So here's the thing with Google. I mean, Google's still down pretty significantly from that all-time high. But when you look at the variety of product segments that it has, I mean, for me personally, I am buying shares in Google. I think it's a bear market buy because, I mean, you have all these product segments and yes, you know, they are cyclical. They're being impacted by the overall macroeconomic conditions, but this company is not going anywhere. And so for me, looking at the potential of AI, going forward, yes, there are trailing Microsoft currently, I believe. But when I look at the fact that, you know, we've kind of found a low here, it's possible for us to hold that low and start, you know, trading higher if we can just get some good news out of this company. I think YouTube is the way of the future. Of course, they saw a big burst throughout 2020, 2021 when people were going to YouTube and they had this high growth time frame. But you know, comparing that to now is not really the same thing. And so I don't really think it's fair to say, oh, you know, they're not growing at the same rate as they were during the pandemic. So to sum it all up, I wouldn't be surprised if they did trade lower post earnings because they've had a few different issues over the last few quarters. But I'm still buying the stock on a long-term basis because ultimately I want to bet on this company.
And on that note, I wanted to get your take on that. Where do you look to, you know, as far as what the move could potentially be if it is downside? Where do you look to as far as where to put some orders?
So when you look at a Google chart right now, you're sitting right up above an 8 EMA. The options market is pricing in a $4.67 move. So, you know, at the current price of 106, you know, maybe a downside move, we get down into 100. 100 is a really nice area of support. And if we did fall to that zone, you know, that is not concerning to me. If a company does actually have what's called a 2x move or twice what the market makers are pricing in the options market. Let's say it falls $8, $9, $10. That's a moment in time where I look at it and I say, oh man, you know, they're still going to be struggling over the course of the next quarter because it's a twice what is expected move. So, you know, I think down into 100 is still a good buy. And then if you look at the upside here, I do think that it makes sense to target 110 and then upwards into 115. So just on the shorter term basis.
All right. I want to make sure we get through all of these. So let's keep going here. Microsoft on the other side of the AI battlefield coming up tomorrow night as well. What do we do with Softy?
I think Microsoft is going to rule the world. ChatGPT, you know, in the beginning, I thought it was something kind of funny and type some, you know, some funny prompts in there. But after the past couple months and seeing what it's capable of doing, that partnership with OpenAI, I mean, is just going to be massive for them because, you know, they can integrate that into all of their tools. And so definitely buy and hold on Microsoft. With Microsoft specifically on earnings, you know, historically, if you look at the last 12 quarters, they've done really well trading higher post earnings, especially after the report. So oftentimes, you know, we'll see a little bit of just like a slight downward move. For example, Microsoft has a $10 expected move. So what we'll see sometimes on a weak quarter on Microsoft is it will trade lower by that $10. Again, a normal move. Because it's the market maker expected move, and then buyers come in. Over the last 12 quarters, you know, we've seen buyers come in and snap up the stock, regardless of if it ends up trading lower. So I usually like to place some bullish trades on Microsoft. This quarter, it's a little bit dicey just because we've seen downward moves the last 2 quarters. So I'm not going to get very aggressive with that. But I do like the post earnings trades in Microsoft, where if you get a dip, you know, about $10, then you can usually come in and buy the rise after that.
All right, the other two obviously to come this week, Amazon and Meta. We touched on briefly there with Meta to kick things off. But I mean, there's so much to talk about and so much to look at this week. How do you really narrow your focus down when it comes to, you know, is it Meta, is it Amazon, or do you have a plan for both?
So specifically what I look for is I look for patterns. I want to look for a fundamental overall pattern where I see rising EPS numbers over the course of the last 12 quarters. I like to see specifically if they have any kind of increased dividend. And then I also like to look at what the stock actually does after the report. You know, are we having buyers coming in and picking up those shares? even if it trades lower? Or are we having massive upside reactions? Because the thing is that oftentimes, and especially this quarter, we're probably going to see stocks where, it's a little bit lackluster and it trades lower. But those can be good opportunities. That's why you have to look at that fundamental aspect. Then what I like to do is I like to couple that with the trend, specifically with Amazon and with Google. The reason why I started buying more shares of these two companies is because we're starting to see a shift in trend. So if you look at an Amazon chart, you can see the way that it held the $81 price point, and then you can see that it's traded higher into earnings the last 2 quarters. So it's a short term to see that, shift in trend. Like, normally I would prefer to have a 2-year, 3-year, 4-year trend, but that's not the kind of market we're in. So when I'm starting to see that shift in overall price pattern, I have consolidation on the Amazon chart. Yes, it is up against key resistance right now, close to that value that it was at last quarter. But, for me personally, after the split and just for the long term, I want to continue buying this company. And, Google, it looks exactly the same. You've seen that low hold. You've seen the trend shift. Yes, the last 2 quarters, this stock did trade lower post earnings, but it didn't matter because people came back in and they bought it, prior to the report. So it's continuing to just chug a little bit higher. So, trading lower on earnings isn't the worst thing. Oftentimes you can come in as a trader, and if they start rallying the next day, it gives you a really nice trade setup.
Given the extent of the moves that we've seen in most of these so far this year, almost to be expected at this point, I would think. It's the biggest of the biggest weeks as far as this earnings season is concerned. A ton of great insight, as always, guys. We'll get this cut and posted so everyone can go back and do some research and get ready for earnings. We appreciate it. As always, Danielle Shay, VP of Options over at Simpler Trading. Thank you.
Thank you.